So now I want to look at some examples of our current market. Now, these could be considered isolated examples. I pulled a few. But what I'm seeing in the market here, at least on the east side, where we do a primary amount of our business, is we're seeing smaller price drops. These are some big examples. And this one's over here on 18th Way. It's in a quiet little neighborhood. They started this thing out at 1.45 million, and currently it's available for 1.15 million. Huge price drop, almost 20%.
Yeah.
And when you look at your mortgage payment and your closing costs, this is pretty interesting. So you've got a $6,500 mortgage payment, roughly. This is going to change slightly, depending on where you go. And
that includes taxes and insurance.
Right. This is PITI.
Yeah.
PI, principal, interest, taxes, insurance. And these are generalizations. This is Tycor titles calculators, so they are local. They're estimating this for taxes.
Using a percentage,
a little bit for hazard insurance.
Yep.
So it'll change, very slightly. But look at this. Your cash to close is $314,000 if you're putting 20% down, which is not unrealistic for the people buying homes over here on the east side. Now you come over here to today, and you've got a $6,200 payment with $250,000 to close. Tell me how that's not a good deal for a home buyer.
Because of the price drop?
Yeah.
Nice. Yeah.
And I'm assuming here, 5.25 rate. So maybe the rates that you mentioned earlier, maybe this goes up, another $100.
If that, yeah.
Something like that.
Yeah.
Versus a 3.25 rate on a way more expensive house. So in this example, and I wouldn't say that's isolated, but it is it can be tougher to find if you don't know what you're looking for. In this example, you're saving money, even though the interest rate's 2 points higher.
Look at how much less down you have to bring. That's huge.
And on this particular home, I toured this home. I went and saw this home in person. Is it a little dated? Yes. Is it livable? Absolutely. Is there anything catastrophically wrong with it? No, we looked at the inspection report. Minor homeowner stuff. When you buy a home, you need to factor in X percent, for capital expenditures. In the investment world, you call them capital expenditures, but in your home pocket, that's when your water tank goes out, or you need a new roof, or those are your expenses. You got to factor that stuff in. I drive by so many houses, especially Seattle, Eastside, where prices have just gone through the roof in the last 10 years, and there's so much deferred maintenance.
Yeah,
there's so much deferred maintenance, and those homes that have the deferred maintenance. I just was in Sammamish looking at another one that's been a rental for the last 7 years. Those homes are not selling as fast, if at all, because A, they're priced incorrectly, maybe, and B, where are you going to find a contractor right now to fix these things?
Right.
And on a $1.2 million house, you really want to drop $150,000 to fix drainage issues, put a new roof on it, paint the interior, the exterior, fix any electrical or plumbing issues? Do you really want to do that right now with inflation and kind of the uncertainty in the markets? Probably not,
Yeah.
unless you're turning it into a rental and making money off of that, investment.
Or if you're a DIY or DIYer, uh,
Yeah,
do it yourself person, then you look forward to spending a few dollars at the Home Depot. But,
totally. Yeah.
but,
Make sure you buy stock in Home Depot first. But anyways, so that's one example. Here's another example. In Bellevue on 142nd Ave. They listed this thing again the beginning of May for 1.78 million, almost 1.8 million. It is now 1.3 today. And if we look at the same thing as before, using the same rates, $8,000 payment versus and a $386,000 cash to close. Versus today,
5.25%.
Yep, 5.25%. Again, probably a little bit low for today's rates, but
It's okay. It's good for the example.
$7,300. So you got less payment by about $700.
Wow.
And 293 to close versus 386.
Almost 100 grand less.
So these are some real world examples of the opportunities in our market here on the East Side currently.
That's fabulous, Spencer.
And they're not isolated. I just didn't have time to go pull information for 30 houses. Got other stuff to do.
Well, people watching don't want to look at 30 houses.
No,
They've
exactly.
seen 2,
so
they get it.
Yeah, so you guys get it. All right. So and so what we're telling our sellers right now is, yeah, maybe it's not a good time to sell unless you have to. And maybe wait till the spring, till things tick back up again and we see a stronger market like we do every year. And for buyers right now who are shopping, shop till you drop. I mean, you've got your choice. The thing that you'll run into out here, like if you're moving from Texas or one of these Midwestern states or like Kentucky, what I hear from those buyers is, I just can't find anything that I like. And part of that's due to just the difference in construction types that we have out here. You're not going to find a 3,500 square foot ranch on an acre or two that's within an hour of Seattle.
Right.
Unless you bring out the checkbook and you've got $2-3 million.
Yeah.
You're just not going to find it. And to go to build that same thing, you're looking at maybe $450 a square foot, $250 a square foot minimum. Like,
that's so much money.
It's, but yeah, I mean, that's what the custom builders are building right now. If you can go on the cheap side and maybe get $250 a square foot, but you ain't getting anything lower than that. So it's still going to cost you $1 million to build that thing. But yeah, so there's some examples. I just pulled a couple of news stories that I thought were interesting and kind of spoke to where I think the market's headed.
Mm-hmm.
And Tom, you chime in here as well. Meta releases former Zetron headquarters in Redmond. Not releases, they leased it. So Meta's gobbling up some more real estate here on the East Side.
For those of you who don't know, Meta is Facebook.
Yeah. For anybody that's been living under a rock for the last 2 years.
Yeah.
No offense.
But anyways. No, they're gobbling up more commercial space.
So Meta's gobbling up more commercial space. This is a 200,000 square foot warehouse space that I think they're using for R&D. I don't know, but we'll see. No, that's just the other end of the article. And this was a graph that I pulled from another article. This is how many units Seattle, Bellevue, Everett metro area currently has under construction Q2 2022, 24,660 units under construction. So, those will be done, within the next year or so.
This is houses?
This is apartment units.
Oh, apartment units. Okay.
Yeah.
I'm sorry.
And this is a graph of the top 20 metropolitan areas. Look at Dallas, Phoenix, New York, top 3, Austin, and we're down here. I don't even think we're in the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Oh, it'd probably help if I shared my screen with everybody too. So this was from RealPage Inc. They're a information company.
And we're number 12 on that list.
Tracks this stuff. Yeah, we're down here.
Yep.
So there's going to be some more stuff coming online. But with planned growth in Seattle's population of 20,000 residents between April 21 and 2022, and with a continued growth at that rate, is that going to be enough? That's what people are asking.
Right.
And according to the data that we just looked at a minute ago, it's not. Because we're still seeing price appreciation in the double digits. And so what I expect to happen in the spring, barring World War III with China or some black swan economic event that's just catastrophic for the whole world, barring those types of things, I expect appreciation to continue and prices to level off and continue to rise in the springtime as they normally do.
Yeah.
There's too much growth in jobs, and the diversity of our job market here is pretty extreme. So anyways, moral of the story is, if you can get into something now, maybe it's a little dated, maybe you update it over the years that you're there, force some value to it. But if you can get into the area, the location that you want to get into now, it's going to be a good idea. Again, not financial advice, but just what we're seeing in the market and what we see spread out, over the last 10 years here in the Seattle market. I think you'll continue to see that growth, even with the new almost 50-cent gas tax we have here in King County. Thanks, Jay Inslee.